Alright, welcome to Firm Profit, Ryan section. This is going to be my version of tying all together, part 2. Very simple method. The difference between tying all together, part 1, we go into a little concept of intraday trading and day trading, pretty much. You could also use it for swing trading. However, tying all together, part 2 is a gift and a blessing in disguise, because if you know how to use tying all together, part 1, you'll be able to execute tying all together part 2 on a higher scale to ultimately teach you how to do one thing, and that's to trend trade. Trend trading is a way more aggressive trade style that you would not be using the H1. This trading style will teach you how to use the H4, the daily, the weekly, or even the monthly charts. The higher the time frame, the stronger the trend, and the goal of trading is to efficiently scale up and trade on a higher time frame so you can gain the most pit value, and you already know to be forever in profit. So what we're going to do is we get a very naked chart, okay? And with this concept, you're just going to load the naked template, okay? And we're going to add ADX to the fire, and we're going to also add the RSI. Now, the reason why we use the ADX and the RSI is very simple, because with the ADX, it distinguishes how to read the trend. What do we mean by that? Is the trend going bearish? Is the black line, the ADX line, trending above the 20 and 25? Is the red line giving us a signal saying that we're in a bearish trend above the 20 and 25? Is it cluttered? Is it going to be a form of no market movement due to consolidation? Okay, consolidation being right here. As you can see, the market with ADX, the green, the black line, the red line is basically showing price all flat in this area, when this flat in that area basically have no move. Very simple. When market is also flat like this, the ADX is not showing anything, but it's showing that it's about to start trending. We also will get variations of seeing significance that on RSI, where you already know the banks, the institutions, your hedge funds, all of that are getting ready to do moves. And in this case, when market was flat, ADX wasn't really showing you any real thing because it was trending. We do see right here that on RSI, it was breaking out to be a buying situation. And it did confirm here later on with ADX. This is a real quick rundown of why we use these oscillators. However, we're about to get into full details of tying all together part 2. Alright, so if I once again, anybody entering the room, just mute your mic, because I'm about to go into full depth. Due to tying all together part 1, we do know that when we do a move, just want to clarify this, so I always get questions. When we start the day, we use the day breakers, okay? Day breakers must be on. Day breakers not on, tying all together method will not work. Day breakers on, tying all together method will work. Alright? So when the day starts, it's very important that you understand that we start from looking at how the day began and how the day ends. It's not about the overall trend, it's overall about how did the day begin and how the day ends. If it's in a downtrend and the day started up looking at a high and then it pushed a low, what you can do is you're going to look how the day began. We're going to zoom in, okay? We're going to grab right here the top of this wick. Why? Because this wick is the higher high. If you're having issues trying to figure out what it is, what you can do is you're going to basically drop a horizontal line to measure it to get a feel and find the highest part. And right here, we do see that this is the highest part. And we're going to drag it down like this. Boom. That's beautiful. And we're going to realize that we can delete this line now. Why? Because this now accomplished the tying all together part 1 method, where we do see that price gives us the predicament, the future prediction of what's going to happen the next day. And as you do see here, price did shoot up to 38.2. And as you can see, it did reverse. And we do have signals right here saying that we're in a strong downtrend due to ADX. And we did drop, and the market did fall for 181 pips. And later on, it does have a sign of divergence, as you see when the market is flat right here. And price do shoot up due to the fact that RSI is having divergence, and we do see a nice double bottom, nice divergence, nice confirmation later on, and price does go up. And that also tells us that we can redo our Fibonacci to over here for the next day, And once I'm done showing you this one little last setup, I'm going to go into the full details of tying it all together part 2. Boom, boom. Shows you how to get it for the next day. Look, 38.2 got pinned. Market comes down. 23.6 and 0. Once again, that shows us the structure, where if there's going to be any structure, we got structure. Structure being the double bottoms, double tops, triple bottoms, triple tops, head and shoulders, the better head and shoulders, and teacups, flagpoles, and all that other stuff that you could possibly think of. Price does break out past 38.2, and next extension 61.8, 78.6, 88.6, 127, 161.8. You already know how that game goes. Now, the reason why I went over this in the beginning for the introduction is so you can remember how tying all together part 1 is, because tying all together part 2 is the same concept, but a further use of using it on a higher time frame and seeing it. It's so many different levels on the H1 chart. Now, here's a marked up chart of how it looks, and I'm going to explain how this all happens and why these numbers are the way it is over here. So now that we established that the market did shoot up through the double bottom, and we do see how the market eventually did hit 127 over here, we can now delete this and go to full details of tying all together part 2. On H4 chart, the daily chart, the weekly chart, or the monthly chart, it doesn't matter which chart. As long as you know how to draw it the right way, that's all that matters. Because, man, when I show you this, it just works straight up. Can y'all hear me? Alright, so we're good. Alrighty. Alright, let's go to it. So what I would do, you already know the higher time frame is stronger the trend. You might write this down. H1 is nothing but looking at everything chart. You can draw anything you want on the chart, but if you really want to get really good at analysis, I highly recommend you look at the H4, the daily, and the weekly. Those charts are very, 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 very powerful. Now, let me give you an example. The same way how we was drawing on the H1 chart, if I wanted to draw on the weekly chart or even on the daily chart, you're going to notice that these same period separators starts here and ends here would be the same concept of us drawing Fibonacci from here to the highest part over here. So let me do that real quick. Boom. Just like that. And it can predict the next day. Now, we do realize that this is a day 1 chart. A day 1 chart, I do believe, let's count out the candles, show 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22 days to fill. Okay? 22 days to fill up the chart. So this type of setup will predict the next 22 days. Okay? You might. This next setup will predict the next 22 days. If it's going to show me the next 22 days, that basically tells me that if I draw out my supply, my demand, have my structures all laid out, as in double bottoms and all those other fun features, you can clearly see when I do draw my zones, I definitely draw from the wick to the tips of the body. Me and Quinn definitely do the zones a little bit differently. So you can see how I'm just dragging this one a little bit out, the wick to the tip of this body to give us the zone. And as we can see, the structure of this will be a double bottom, right? Boom, market shot up, market shoots down, double bottom, correct? We see it as an bearish trend, but we also realize that the market is heavily oversold. So we go to the H4 chart and we try to make sense of it. The same way how I drew that pattern, we'll be able to identify how it moves all the way over here. But the best part about it is, on the H1 chart, that's where we're going to get our full mapping. And that's how you also can see how price, when it broke 88.6, look what happened later on. Price goes to 78.6, reverses off of it, comes back down, plays around on 88.6, and then finally gets through it. But what it does ultimately, it shows a sign of divergence. So even though it broke 88.6, we're not expecting it to go down to 127 Okay, because we do have a sign of divergence saying that the market is getting ready to buy because it went back inside that demand zone due to the fact that we're inside of the daily demand. The daily demand is basically telling us that price is in a strong structure at a low, even though that we do see divergence being the plausible effect. We do see that when price went back down underneath the 88.6, it instantly shot right back up. And we got a nice Morningstar pattern right here. It goes back up, and it's still inside the zone. We can expect it to be higher highs. Now, the reason why I did fall, like I mentioned before, is due to the fact that it reversed off of 78.6. And then we have a nice head and shoulders pattern right here as well. Due to that situation of the head and shoulders, it did fall. You can actually draw a neckline if you want. And we do see how the market did fall down. Here's resistance. Here's your neckline from the low to before the breakout point. The market comes back, retests that, and once again it becomes resistance, falls down, divergence, 88.6, and goes up. Is the chat in the way? Because I moved it. Alright, this was wondering. Alright, cool. So now we're gonna go look at on H4. You actually delete these lines. You can see how there's divergence play down to H1. And we do see how the market over here is the same concept on the H4. Market is flat, massive divergence. It goes up. Here's the Fibonacci line from the daily chart that I drew from over here. Bam, bam. Everything else that consolidated over here and it showed us the divergence of it falling down, you can actually see it on the H4 chart. So on the H4 chart, which will be start of this day, which will start the day breaker. I'm going to actually number it right here for you to see. Which would be right here in this area. Basically this whole entire area right here. When price basically came back above the 23.6, we're looking for one thing, structure. We got a double top. Okay? Level 1, level 2, and a reset with a nice double top. Market wasn't making no higher highs. As you can see here, from this area over here, and this area over here, you can clearly see it's inside of a zone. Nips it, falls. Price instantly, when it goes down underneath 38.2, pulls back just a little bit. Does the other shoulder to this other pattern that we have here, which is a head and shoulders pattern. Shoulder for the double top. Here's your, my bad. This is the head. Here's your shoulder. Here's your head. Here's your other shoulder. Market does another double top and falls underneath 38.2 and continues itself down. Breaks past the 61.8 on the H4 chart. Next extension you already know is 78.6. Market pulls back just a little bit, nips 61.8, comes back down, falls underneath it, 78.6, hits the zone, demand zone, like a draw on the daily, pulls back once again, and then falls. Goes back underneath 88.6, and as you see, it's inside that structure, and look what happens. It instantly goes up, and then we realize that the market is still starting to push up, currently where we're at. So if we were to measure all of this, if you call it from the H4 high, and you saw the structure and that swing, but it gave you 1,052 pips. So let's say if you fell short and you were waiting for the true confirmation, you got in, let's say over here, where you felt that this double top was going to clear, and just say your entry was over here at the 8. So we already know that we're trading from anywhere between the 10 through the 19 move. Then we mark it right here. Go to the H1. Which will be over here. So we're looking for the 10 through 19 move, right? So we're going to get our charts, and we're going to look for the 10. The 10 is what? This big candle right here. 10, and here's 11. So the breakout, here's the double top. We see right here, we had divergence as well. Market is flat. Here's divergence. And look what happens. Market shoots down. Entry, London Open. In profit, that is 249 pips. Continuation of the trend going all the way down on the H1 chart. This is scrolling all around. Market comes to the 50. Like I always mention, time all together, the 50 is what? The middle part of the double bottom or the middle part of the double top. Or you could call it, quote unquote, your M's or W's. Boom, middle, boom. Market, the wick right here goes back and reaches this high. And look, it instantly falls off of the 50, right? 38.2 later on gets broken. I don't know what type of news event this was, but it was all news clearly. Market shoots past that, pulls back up. Looks like it's trying to pull due to the fact that it touched the 50, trying to make it look like it was going to go back up, but it didn't. 61.8 stood as a strong area of support, and it finally breaks it, and it goes down. You clearly can see how that all plays out. And this is where the market's at, where it's at right now. Okay? And that's just doing Fibonacci off of daily using the time altogether method on a higher time frame with incorporating RSI for divergence and ADX. Now, if you want to do it on a higher time frame, let's say you want to say screw it, let's go look at a monthly chart or a weekly chart, whatever the case is, or any other time frame or any other chart, gold, oil, silver, I don't really care. It doesn't really matter. I'll just keep doing this for a while before I even get into that. Does anybody have any questions? Questions? No? Okay. Yeah, question? I'm about to start in a further depth. I don't do wick entries. I don't do wick entries. It's that simple. Yeah, that demand was drawn out on the daily. I don't use take profits. I close my profits manually. I set my stop loss 40 to 50 pips. Entry on the H1, correct. You're struggling on entry because you just said it yourself. You were trying to target wicks. Target reversal candles. Morning stars, evening stars, railroads. Don't target wicks. You're struggling on entry because you're trying to catch something that you're not able to catch. Not everybody can catch a wick. I don't like catching wicks. So why do it? The Quillen does it. I mean, if you want to catch wicks, go talk to Quillen. Or somebody that's good at doing it. Entries off of reversal candlestick patterns, supply and demand zones. I'm about to get more into depth with time altogether. I'll show you more about entries with a lot of stuff you're about to be mind blown with. Alright, so I'm about to start it back up. Alright, got you. Alright, so getting back out the method. Oops. If you were to draw time all together too, by the way, we could also do it on the monthly chart. You could do it on any chart like I mentioned. It doesn't really matter. The same concept. Day starts, day ends. Day start, day ends. Okay? You can zoom in. Look how this is on the monthly. Go to the weekly chart. You can see it how this played out. Price did what? Off of the 50. That's a double bottom because it's the middle part of a what? Of a double top. So sometimes on the double tops you would have positions that will look like this. And this is the way how the market does the crap to fake out people. And that's what we have here. Okay? Market shoots up and it does another double top, but right here on the weekly, what do we see? Divergence. Tying all together on a higher time frame. That's all this really is. Higher the time frame, the stronger the trend. So we do got that. Clearly see as a double top, strong resistance, nice divergence, and look at the fall. Due to us drawing on the monthly from here to here. 23.6 and 0, we're looking for structure. What do we see here? Shoulder, here's a head, here's a shoulder. Bam. Right? And then we go back to the weekly. You see it. Market falls, 23.6, 38.2 is your clearance. Here's also your neckline for the head and shoulders pattern. Right there. What's that right here? So right here, market falls, 38.2. And it breaks out. Probably won't be able to see on the H1. Let me see if I can mute the chat. Crap. Settings on RSI is 5. I don't know how to mute. Just go to meeting chat. But just going back a little bit. Same thing I drew on the monthly chart. You can see it here how price was playing around the 38.2. Look at the fall. Next extension 61.8. Boom. Check. Falls. Market gets to 78.6. Breaks it. 88.6. Breaks it. Double bottoms right here. Divergence is the key. Okay. Divergence. Showing us that it's a buy. Clear example. Market goes up 88.6. Extends to 78.6. Goes back to 88.6. Goes back up to 78.6. Breaks it. Next extension 61.8. Look what happens. We got a head and shoulders. Once again at 61.8. Market falls. It's not no rocket science. This is just the way how Fibonacci is. It's a fact that Fibonacci is going to move like this. Then you throw in your divergence and levels. If you want to add that to the flavor, you can. This is 2. All consolidation. Here's your 3. Right here's your ugly double bottom, and the market does shoot up. Refer to levels and divergence for that. This training is not going to go over that too much, but you can clearly see it being a head and shoulders. 61.8 was respected, and it did fall all the way down to here, and that is 1,695 pips. I mean, these are the certain things that you can literally go back and back test and see everything for yourself. Now I'm about to get into some more topics about this. Mind you, this is all on GJ. ADX is default. Low to high or high to low in between the day breakers. Very simple. Doesn't matter the trend. It's all about what happens in that day. That day breaker. Same concept as the 1 hour chart. Yep. Best time frame to count levels, so say 1 hour chart. Support and resistance, supply and demand. I use support and resistance and supply and demand. Yes. I do my levels on the H1 only. Any level could reset at 1, 2, or 3 due to the structure being the trend. The structure being the trend, meaning if you see double tops, double bottoms, triple tops, head and shoulders, inverted head and shoulders, or T-cut patterns, stuff of that nature, it is showing that the trend is going to change due to the structure being different. Now, if you see divergence inside of it as well, that is structure, once again, being different. As you see, the market was in a downtrend here. Where you see the market is on a downtrend here, and the market is pretty much flat, we do see divergence here. So that's what I mean by structure changing with the trend. That's all this is. Structure literally gives you the trend. Master the patterns. You master the market. DJ, since we are approaching these areas, I do want you to know these wicks, this crap, wherever the economy situation was back then, these are all just big ass area zones. Okay? Zones. I put it here because this is the middle. This is kind of obvious. You can draw like a line right here. That's a zone. And a line right here to show you this is also a zone. But this is pretty much the middle part where we're at. This is what we're dealing with right now. So if price breaks any of these lows, I'll say, hey, you know, we're getting to a different type of level. So what I would do is just do different colors. Okay? Different colors will show you if it breaks a certain point on an hour chart or on another time frame, you know what that means. That this blue line represents a support level off the weekly chart. So right here, when price breaks this, as you see, went back into the zone. So it broke through a demand zone, and now it becomes supply. Price goes inside of the zone, which is supply, and we see a reversal, and that reversal right here is the even star pattern, and price falls right back down. Market right here is flat, and we do see signs of divergence. On the weekly chart, we see signs of divergence. So on the daily chart, we see signs of the market. When I did draw down the daily, give me a second, of being right here inside of a zone. Mind you, this big zone right here is a zone off of the weekly chart. This zone right here that I just drew is a zone off the daily chart. We see divergence forming on the weekly chart. We see the market doing a double bottom on the daily chart. We see when I get my Fibonacci and I want to draw off the weekly, we do realize that I mentioned on 88.6, we were getting that reading that the market is breaking out. And then once again, there you have it. And you see one big reading. So your entry is off of structure. Pretty much that simple. Understand patterns. Double bottoms. Head and shoulders. Okay? Let's go look for some more. Double tops. All double bottoms and double tops are not clean. They can look ugly sometimes, and that's okay. Your goal is to identify. Example, a big double top pattern right here, as you see, does a double bottom inside, but inside of this double bottom, in the middle part was a double top before it rolls back up, and the divergence was activated right here for it to go back up, so you didn't get caught slipping. And look at the confirmations with ADX for it to go back up. And the market once again goes back up and does what? A double top. So you get entries off of candlestick reversal patterns, or to enter off of divergence, or wait until you get more confirmation of a nice healthy green size candle. You can even throw in tying all together method 1 to identify how the intraday setups are moving. So right here, as you can see, is what? 10. which is how London open move. The market drops. When the market rose here, remember this is GBP, JPY, a London Asian pair. Once again, a London Asian pair. Remember, the move will be around 3 or 4 MT4 time, or you can say GMT time, if it's going to move during the Asian range. So here's your 3, here's your 4. Market shot up, 372 pips. London, GBP is now taking over, and it drops. Double tops with nice swing trade setup, and look what happens. It crashes pretty much all the way to down here. So if we get a measurement, you can literally drag it all the way out, and that's 1,224 pips. Now, if we also incorporate volumes, let me actually create on my chart. It will show you where the banks are buying. Oops. Let's go to the daily chart and just draw a zone. Very simple task. And we draw, we enable values. Alright, this is bad to look on that chart. Let's go to H1. Every time price got inside these zones, you see that there was lots of activity with value due to the fact that I drew it, the zone, on the daily chart. So this is where the banks, the hedge funds, and everything is getting ready to buy or sell. Okay? Keyword, buy or sell inside of this zone. On the H1 chart, I can't really show you value on the daily chart too well. It looks too big, it looks too weird. You can see how it plays out right here. We finally get inside of the zone. Okay? And the market does what? Inside of this double bottom, you see massive green, massive blue lines right here. Those blue lines are identifying that the market is about to go up. The banks, the hedge funds are buying. There's divergence. Tons of volumes into play. Volume being all of the traders that's actually placing trades in the market. Retail traders, advanced traders, banks, doesn't matter. Me and you. There's buys, there's volume. Market goes up. And as you see, eventually gets to this high. And it's outside the zone. Once it falls back inside of the zone, we're making decisions. Either A, we're going to buy it, or decisions that we're going to sell it. Any questions? Volumes on MT4 is just default. Now just push Control L on the Mac. Or you can just go right click here and you can enable and turn off volumes. You can even put on grids. If you want grids, I don't use them craps. Just boom. Pretty simple. Let me answer some questions. Mark, it will be in a recording. Yeah, I'll go look at UJ right now. Volumes is just an area where you see banks getting ready to buy or sell inside of the market. That's all volumes is. So if you see like the market is getting ready to like do like some type of pushes, what the hell? The market is getting ready to do pushes due to the fact that you see that it's inside of a zone. Values will take over, and you see if the market is either going to be a buy or a sell. As you can see right here, large volumes inside of a demand zone. Is it worth doing it? Yeah, because on the weekly chart, what is it? A zone. On the daily chart, it's a zone. So that area is letting you know what's up. Because if you were to you trade off of those time frames, those are your zones. I got you, Randall, in 2 seconds. Let me give you one more example, Ivan, on volumes. See how the market was over here? No volume was really being played, and then finally volume, how nice healthy size candles happen over here. Right here was telling you that there was no real true liquidity in GBP JPY in the year of 2007, 2006, and stuff like that. In the year 2009, it started getting tons of liquidity in the market. Low value, high value. Okay? So over here is lots of areas of support and resistance because it's past market. So these box-like figures are zones. And it's proven by doing a simple supply and demand zone task. Price got inside, since supply, because it's underneath it, right? Got inside, it becomes supply. Supply, look, double bottoms. Here's your divergence. This is why it's important to understand how to draw zones. Okay, we got divergence. And what do we realize? Price goes back up, taps it here. There's a bigger double bottom. And look, it finally breaks the zone. Here's a big candle that it finally broke out that zone. And then look what happens. It touches the zone because it means now what? Demand. The price goes up. Now this is why you see price trying to break it. And look what happens. It does, but instantly becomes some type of daily structure right here. And instantly pulls back up inside of the zone, which is still supply. And it's not playing around. But we kind of see that divergence is sort of like playing a role right now. So we're looking for long-term buys coming to GBP JPY, which will most likely, honestly, retrace all this crap. Because whatever happens to the left happens to the right. So if we're in a strong uptrend, we can predict that the market either could go to here. So how can we really figure that out? The weekly didn't really end. So when this whole entire cycle ends, right here, which would be in, I'll tell you the date, in January, okay, next year, 2017, we're looking for the end of the year move because we could draw a Fibonacci to figure out how the next, well, technically the whole next year is going to move. Pretty much that's how straightforward that is. But look, here's another example. Let me delete this and show you. Backtesting is gold. It will tell you everything. This is why I'm telling you this is a long-term trade method. This is the lowest part of the wick. This is the highest part. Day opens. Here's a low. Draw this again. You can see how I did this because it looks consolidated and cluttered. You can get a line. You're looking for the lowest part of the day and the highest part of the day. So day opens. You can drop a line here. And we're going to realize that there's a wick here. So this wick means this is the low. So we see right here. And let's say you just want to eyeball it. And let's say whatever, you drew it right here. You notice that there's a piece of wick right here. That piece of wick right there is the high. And that's where the last recorded data of the high was at. So we could delete these. And literally just draw Fibonacci. This will be from this low to this high. Boom, boom. And we'll predict all of this. Price, literally predicted the whole year. Okay? The whole 2016. There's no fakeness on this. Started 2016, okay? You can see at the bottom of the screen. And it just showed you that it would end at 2017. So price breaks past what? 88.6. After it gets to 88.6, the first target will be what? 127. If it breaks past 127, next target is 161.8. Look what happens. It does that, pulls back, hits an area of resistance. Okay? Oops. Hits an area of resistance and falls down. 127, 161.8. Next extension will be what? 261.8. What do you see here? Looks like a double bottom, but really it's a triple top. 1, 2, 3. Fails to break the high. I'm gonna answer your question in a second. Fails to break the high. Also does like a form of a double top. Market falls. Next extension was 261.8. Brexit, hint, not really, quote unquote, logical that the events happened, just out of, curiosity. It happened because this was just the fall of the market in GBP. They were going to leave the European Union due to just technical analysis. That's why I don't even watch news trades. I don't care about the news. And the market will show you everything. 261, market goes down, boom, comes back up, retests 261, does a what pattern? Predetermined. That's the word I was looking for. Does an evening star, and market falls back down, and it comes back inside the zone. So let me delete this, and boom, that's where we're at. Look, it's a doji. But we also see divergence being in play. It's predicting the whole year. So it's up to us to be patient and acknowledge what the market is giving us for us to trade it. That's all this is. Look at this. Same thing I drew on the monthly chart. The weekly chart. I'm sorry. 261. Market continues its fall. Form of trend trading. Now, you're probably wondering, like, Ryan, well, how can I catch these moves? Well, simple. Supply and demand. Buy low, sell high. Incorporate divergence. Simple. How do I enter a trade? Reversal patterns. Structure. Head and shoulders. Don't understand it? Go to the website and go write it down. Look, I'll even go to the website for you so you can actually go see the patterns that's actually in the group. Everything is already, we have everything here inside of the group already for y'all. Major market patterns. There you have it. Your goal is to get better on entry. Entry, engulfing, right? Entry, engulfing. Learn morning stars. No. My entry, honestly, would either be right here or due to the time, 10 through 19. So if I see a move during 10 through 19 or a move 3 to 4, I'm looking for a reversal candlestick pattern that's healthy to give me that entry. Right here, a healthy pattern. What time? 16. What time is that? 1 hour after New York Open, which for me will be 9 p.m. 9 a.m. And it's a head and shoulders pattern. And it's after 1, here's your level 2, here's your level 3. Instead of getting a double top, we have a head and shoulders, a different variation of a high. You see where I'm going with that, Jay? Randall? I don't get your question. Where do you draw your fibs? That's your question? Randall? Your question is, where do you draw your fibs? I just explained that. You gotta watch this video over and over again. Because it's really that simple. When the day opens, matter of fact, I'm not going to explain that right now. Watch this video again. I went over that, how to literally look for it, using support and resistance to find a high and to find a low based upon how the day opens and how the day closes. This is that simple. If the day is going into uptrend, then you need to drag from the low of the day to the high of the day. Here's an example. Here's a downtrend. Here's a low, and it became a high, and we need to predict this. low of the day to the high of the day. We're looking between 23.6 and 0 for what? Structure. We see market being cluttered. That means on the M30, there's a pattern. Pattern was a double bottom. Really ugly double bottom. Boom. Goes up. Head and shoulders. Market goes down. Also, when I explained that whole entire fall is right here on 78.6. Look at this. Look how price right now sits on top of 88.6. If it breaks it, then it's going back inside the zone. We're looking for buys. Got me? I mean, if you need any more help, just inbox me. Or just watch this video over and over so you can get it. Because it's really that simple. It's sometimes when something's so simple, people overcomplicate the simplicity. And it's normal because it's human. We're all humans. We're all going to overthink simple stuff. Boom, you got it, bro. Kev, I got you. AU. I don't even like that pair, but, you know, it's the same concept, different day. AU rocketed because of divergence. It only took me 2 seconds to figure that out. Watch, hold on. Let me clear out this mayhem. I mean, I haven't looked at AU in a while, but it was a no-brainer on that one. It was just divergence, bro. Bam, right? Look at this. Market is flat as a pancake. Okay? Easy. It was just, in general, that like this couldn't, you know, the divergence was just strong. FOMC. I've been preaching after FOMC. You're going to get swing trades after the news. Wait for after the news after FOMC to get your swing trades. Now it's recorded. Now everybody can actually hear it more often off of my new video. FOMC. Is this wick? This crazy stuff? After continuation of trend. Swing trade. What's the swing trade? Double bottom. This is double bottom. This is really ugly. I'm going to explain why I know this is double bottom. Besides, I watch charts a lot. Go to the M30. And here you go. Bam. Okay? It didn't really break this low. This FOMC hits the stop punch, hits the lows, and goes back up to the highs. Here's another double bottom. Freaky as, well, it's kind of ugly. Here's the structure low. It's the beginning of the day. Goes up, boom, doesn't break it, shoots right back up. Last leg spikes. Go to M15, possibly can see it better. See? Boom, 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 spike. Go to the H4. What do we see here? Market's just oversold. Nice reversal pattern. What is it? Morningstar. What does it mean? Buy. Market shoots up. And you can see it's also another double bottom. Just not perfect looking. Let's go to the daily. Yeah, there's lots of divergence for the sell, but we're not there yet. Now, how can we figure it out? Very simple. Tie it all together 2.0. Alright, so we're looking for the lows and highs. Right here, here's your low, which is a lower low than this wick here. Here's your high. And we're drawing, and we're good. You see price is above the 23.6 and 0 in this area, meaning we're looking for a structure to do what? Sell. What is our structure so far? Structure is clearly telling us that the market is pretty much flat here, and we see divergence. What the hell? Divergence. So we go to the weekly chart, and we see it's at a strong level of what? Resistance. Let's get a supply zone, and we see that this is the high. Here's your wick. We can draw that out, and then we realize the market is inside of a what? A supply zone. Let's go to the monthly chart, and it looks like it's getting ready to be overbought. But now let's go back to the H4. Let's go look at how the market is playing around. It's inside the zone, and we're looking for possibly a triple top. If it doesn't break this high, I say get out. No. Swing trades happen after FOMC, meaning 1, 2, or 3 hours after the news hits. Look at all your charts because you could possibly catch a weekly trade and cash out for a whole week. So technically enter the trade and you can say stay away from the market for a week after because you're going to be too busy racking up profits. And just the only thing you got to do is just look at your phone and, either A, close your order, cash out, or just, don't trade it. Adrian, supply and demand, any time frame. But I say the higher the time frame, the stronger the trend, meaning H1, H4, daily, weekly, monthly, all good time frames. Swing trades will be after any pair. Gold, oil, silver, wheat, grass, FIP stocks, it doesn't matter. FOMC will show you that. NFP, nah. NFP is a bit different. FOMC clears the board and resets the market for some weird reason. I've been backtesting that and doing it live. I've been looking at the market do that for over about 8 months now, I believe. Binary, no, I quit that when I first started trading. No, it's not a sell. Let's explain why it's not a sell. On the H1 time frame, AU swing to the high. We're looking for a reset, if anything. Right now, this is level 1. Here's level 2. If the price goes back down, it could get up to here and do some weird double top, and we can look for it. Today is Wednesday? So we're looking at Thursday going to Friday market condition for a possible sell. But right now, it's not a sell. It's barely inside of the zone. Look, it hit the zone and instantly pulled back. It's not a sell yet. We're still in a condition of it going up. There is no structure for a double top. We didn't triple top yet. There's no head and shoulders. There is no sell. Understand? So let's also look at AU in another way of just doing time altogether part 1. And we see that price is doing what? It already did its play. Reverse off of 38.2. There's another reason why it shot up. 61.8, 78.6, 88.6. Market is above 88.6. It hit the zone, comes back and retests 88.6 for support. Next extension will be what? 127. Understand? So let me delete this counter once again. It's always in the way. You can zoom out just a tiny little bit. 161.8 will be up here. So if it goes to 161.8, we can start stressing and say it's not no sell yet. But 127 would be a nice area to say a possible triple top, hit a wick right here if anything, and pull back, close underneath the candle right here and drop. Don't quote me. Just watch the charts later on. Brinks template? Nah. I mean, I have it, but I don't use it. It still works. Move outside the box. Move outside the box. Feel me? Move outside the box. I just don't use this as much. I'm not going over Brinks or any of that. I trade different from this method. I mean, it still works. I just don't use that method no more. Yes, RSI and ADX. Level resets is off of market structure. Simple. Love it. Easy. Because this is tying it all together in 2.0. This is all it really is. Understanding how to use Fibonacci on a higher level. Level resets. Alright. Give you a perfect example. If price is rejecting a certain Fibonacci, that is when you need to get out. If price is reversing, example, if price is reversing off of 78.6, it's then you know you need to get out. So what you would do is go to like the M30 time frame. Here's a perfect example. Engulfing, head and shoulders. Look how the wick stop hunts. And letting you know 70.6 is not going back up for a buy. So right here it's telling you get out. If you're in a buy and you're losing money, cut your losses short, get out, and enter the sell, and that's where the money is going. Alright, resets. Very simple. Santiago. After this one, I'm getting up. So y'all can stay on if y'all want to look at resets. But I was tying all together 2.0. Same concept as tying all together 1. Yeah, my screen is huge as hell. It's 27 inch. iMac 5K display. Nah, I'm gonna go watch Netflix. I'm gonna go watch one of those Marvel TV shows and train next week or something. Level 1, level 2, level 3, level 4. Market falls down, double bottoms. This is level 1. Notice the double top never happened, right? So this level 1 doesn't really break its low. Don't really have a double top. Okay? See forms of what? Divergence. Got it? And we're back off to the races. Why? Because a double top never happened and never made any lower lows. And we see a double bottom instead of a double top, meaning we're resetting. Level 1. Level 2. Bingo. Level 3. Wick to that high does what? Yeah, I know it's complicating. People complicate the simplicity of this. Yeah. Watch this. Triple top. 1, 2, 3, right? Boom. Level 1. Now just so you can see a concept real quick. This is resets. Double bottom. 1, 2. Market comes back. Does a double top right here. Boom, boom, falls. Hits this low in one big zone. Ain't gonna lie, I got a little damage right here myself. I was trying to hold a trade and I just didn't move the price. Double tops, falls. Here's divergence. I think I lost $3,000 in the middle of this crap because I messed up. I really didn't mess up. Just keeping honest with y'all. I got too confident of this hit right here, saying I'm swing trading. I held my buy right here, and I didn't pay. I was neglecting this whole entire double top because I had 10 lots. Yeah, and then I got out, but I didn't take the sell. And then I took a buy here, thinking it was going to be a double bottom for the rise. But it didn't happen, and I lost 3,000 from here to here, I believe. But anyways, what I'm doing. Right here's the double bottom. You see the divergence. That's why you need to understand structure. And, just don't get overconfident sometimes. Even though you might know a lot, you might want to, still, be alert to the market, straight up. Because it happens to me sometimes, too. I ain't gonna lie. So we have the double bottom. My bad, a double top right here with divergence. Market goes down. It falls back inside of the zone, shoots back up. Once again, we notice that it's inside of this area for what? Resistance. There's another double top. Market falls back down. Hits 1, hits twice, hit 3 times, hit 4 times. Reversal. 4 hits to the low. So instead of getting a triple bottom, we have 4 hits to the low, which is our max hit. And look, and a P. Lots of divergence. So reset it again. Okay, flat, Self-explanatory zone. Tons of divergence. FIP. This is Ryan, tying all together, and I'm out. Yeah, that was NFP swing.